This is Rudy for Bester Investor, or as people are calling me now, Mr. Oxy. I thought I would take a little bit of time to explain the warrant distribution that was recently distributed. A couple of people have asked me to explain this. I realize this is not the most exciting subject, but if you're a holder of Occidental Common, then you probably would benefit from understanding the warrant issuance and everything related to it. So here's a short summary. I'll keep it as short as possible and try not to bore you to tears. So why did Oxy issue warrants? Well, I think the most important thing here is they wanted to provide some value to shareholders. There's no question that Carl Icahn had a hand in this. Obviously, they had recently cut the dividend, and one way to kind of keep the stockholders somewhat appeased is to issue warrants. They also say, Oxy, and they have repeated this several times, including in their recent Q2 earnings report that they issued a few days ago, that they wanted to address some of the issues created by the downturn associated with the COVID-19 pandemic. And of course, we all know that the oil prices crashed in the first half of 2020. So they wanted to issue some warrants, which will allow the stockholders to acquire additional stock in the future at what should be an attractive price. So how did this work? They issued the warrants and said every holder of common stock on July the 6th, 2020, that was the date of record, would receive one warrant for every 8 common that they hold. Or the other way around, 1/8 of a warrant for every share of common. So for every 8 shares of common stock of Oxy that you held on July the 6th, 2020, you got one warrant. Who received them? Well, all the holders of common stock on July 6, 2020, which is the record date. What does this mean to Occidental's policy on dividends? Well, Occidental made it quite clear in their conference call that they have not changed their objective of returning value to shareholders. Of course, the amount of any future dividends would be determined by the board and would also be determined by Occidental's financial condition at that point in time and their expected capital needs. That makes sense, and the board has the right, as usual, to decrease the warrant exercise price. For people who work for publicly traded issuers who sometimes get stock options, you may know that sometimes you get an option award that ends up being out of the money, and then the board would decide to perhaps withdraw those stock options and issue new options at lower prices, something like that. The board can do this with warrants as well, if required. Of course, there's a 7-year term on this, so there's a really good chance that the warrants would be in the money at some time during the next 7 years. Here's a real warrants distribution example. This is from my personal account, so you can see here I received 351 warrants of Occidental, and you can also see, if you look over here, that the warrant distribution to make up the 351 warrants were issued in tranches to arrive at 351. So I got little bits at a time on July the 2nd, and then as they were issued, eventually they arrived at 351. The purchase price $4.95. Currently, this is as of today, the warrant price is $3.80, which meant if I had to sell it today, I would be able to generate approximately $1,300 in cash. I have no particular interest in selling it, but this is the value as of today. Now, warrant exercise is a little different from a sale. So I just said if I sold it today, I could generate about $1,300. When can I exercise the warrants? Well, it's a 7-year term, so I can exercise the warrants anytime between now and August the 3rd, 2020. Sorry, August the 3rd, 2027. And what is the cost? $22 per share. So this is different to a sale. So if I exercise the warrants, what it basically means is that Oxy, for example, is now trading at $50 a share, and I want to exercise my warrants and buy the $50 share for $22, and thereby pocket the difference, which would be, in my example, $28 per share, which obviously would be taxable income. So the warrant exercise allows me up until August the 3rd, 2027 to actually exercise the warrants, and basically that means I'm buying Occidental common for $22 at any time within the next 7 years, regardless of what Oxy is trading at on the open market. So on the public market, if Oxy is trading at $15, then obviously I wouldn't exercise the warrants, because why would I pay $22 for his $15 stock? On the other hand, if Occidental is trading at $50, I can buy the $50 share for $22. So effectively, that's my exercise price, and that's the difference between a sale and an exercise. So on the previous slide, I said if I sell it, I can generate $1,300 today. But on the other hand, if I exercise it in the future, I can make a profit, which would be taxable income. What about the preferreds, or Series A? So did the holders of preferreds receive any of the warrants? Unfortunately, no. For Berkshire Hathaway, they don't hold common, and the funding that they provided for the purchase of or the acquisition of Anadarko was in exchange for preferred shares. So they didn't get any warrants issued to them under this distribution. Of course, Carl Icahn had a hand in that, and in a way you could say it's a little bit of a snub to Berkshire Hathaway, but Berkshire will do okay. They'll be just fine. The issuance of additional shares, with the exercise of the warrants I'm reading over here, new shares of common stock will be issued. The difference here is that warrants only result in the issuance of common stock if the holders of the warrants decide to exercise the warrants. So this is not like a typical issuance of new stock where the shareholders are automatically diluted. In this particular example, the shareholders are only diluted if warrants are exercised at that point in time of the exercise. What happens to the proceeds from the warrants of the exercise? So Oxy will receive the proceeds of the exercise of the warrants, and they can use it for any purpose or anything that they want. I talked about the expiration date, August the 3rd. On or before August the 3rd, 2027, you have to do something. If you don't do anything at all, it will just expire. And if it does expire, you will be no longer entitled to exercise the warrants to purchase shares of the common stock at the exercise price, which is $22. So if you do nothing, they expire, they go away, and that's the end of that. What's the difference between warrants and common stock? Or you're holding common currently and you received some warrants. The warrants are a completely separate security from any Occidental common stock that you own. Many people have asked me in the comments to some of my Occidental videos, now that I've received the warrants, can I sell my common stock? The answer is yes. Of course, the other question is, why would you? Especially at the current price, but nothing prevents you from selling it. And I obviously realize that some people might have been fortunate enough to time the market and buy some Occidental stock at $9, which means if it's currently trading at $15, you're sitting on a nice gain. So of course you can sell it if you want to. And it wouldn't affect or impact your warrants whatsoever. If I sell my warrants, do I have to sell my common stock? Nothing happens. If you retain your common stock, you retain your common stock. If you sell your common stock, you sell your common stock. It doesn't impact your warrants at all. It's a completely separate listed security. The actual listing. So how is it different? So it's listed. The warrants are listed on the New York Stock Exchange, and they have their own ticker symbol. Completely different and separate from Oxy. How did they arrive at the worth of the warrants? So they calculate the value, that's the intrinsic value of the warrant at $4.95. How did they arrive at that? Well, actually calculating intrinsic values is a really complicated algorithm. I did in one of my other videos discuss Black-Scholes as a methodology for expensing options or warrants. Someone educated me on that one and said under US GAAP, they actually don't need to expense the options like they do with sorry, the warrants as they do with stock options. So I'm not going to get into detail on this. I just wanted to make you aware that in order to arrive at 495, they had to do a fairly comprehensive calculation to calculate the theoretical value of a warrant. And there are many different methodologies that they could employ. I'm not sure what Occidental used. What's any discussion on stocks worth without at least talking briefly about tax? So Oxy is reporting the warrants or the distribution of the warrants as a taxable dividend, which means it's taxable income. If you're a non-US holder of Oxy Common, you'll be taxed. Your federal withholding tax rate will be 30% unless there's some kind of treaty in place between the country that you're in and the US tax purposes. And I just talked about the fair value or intrinsic value of the warrants at $4.95. And they calculated that based on some complicated algorithm, which accounting people generally love. So in summary, Occidental issued 113 million warrants at $22 per share for a period of 7 years. The warrants will dilute the shareholders if they are exercised once the price increases. The main thing here is that the warrants will generate more than $2 billion of revenue for Occidental, which obviously it can use to reduce debt or for any other purposes that it decides to use the cash for. So it's a nice big chunk of change that the warrants will generate for Oxy, and in that regard, it's a positive all round, not only for the shareholders but for Occidental itself, and also you could arguably say a vote of confidence in the marketplace when they say for the next 7 years they're giving you the option to purchase Oxy Common at $22. Thereby implying that they expect within the next 7 years for the Occidental common share price to be far greater than $22, or at least greater than $22 per share. So on that note, I'm going to sign off. I hope you're still awake. This is Rudy for Bester Investor, or Mr. Oxy, saying keep well, take care, and we'll see you next time. Bye-bye.